Eurozone manufacturing and services output hits a three-year low, pointing to contracting output and a slowing European economy. Growing concerns over the European debt crisis sparks an emergency teleconference with G7 policymakers and some members of the wider G20 later today. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the morning call. So markets are still in corrective mode. We have the G7 meeting ahead of us later today. Now many may be wondering if that could provide a catalyst for the market. So Scott, S&P still below 200-day moving average. Could we see it pop up before maybe it goes lower?
I think this morning we're on pause because we should start seeing headlines almost now. I think that, we could see it any minute. Hopefully I'll wait until I'm at my computer so I could trade it. But I don't think the street knows exactly what it wants to hear. There's been floating around a bad bank that they could put on the side for 25 years, putting $3 trillion into that. Kind of complicated, but again, I guess that could relieve some pressure. And then I do also think that the ECB meets on Wednesday and they're going to decide whether or not they cut by a quarter. So that also could, ignite something short term. But I think at this particular point, the market's broken and everyone is saying we have to rally before we go lower. So when everyone keeps saying that, sometimes you never get that rally.
Yes, and sellers did step in yesterday, but the markets did come off of their lows. I think some now are wondering if buyers yesterday were covering or looking for bargains. What did you make of yesterday's action?
I think you had a little bit of both because we are getting to levels where we're now 10-11% off the highs. There were sell signals along the way, and there were some guys that went to cash nice and early. If you look at the chart of the S&P, we talked about it so many times with the head and shoulders top, which was a sell signal. IBD went to market correction here on this day, May 4th. We were at 1370. So as you continue all the way down, you get to this 1270 area. Some people say, I'm going to dip my little toe in the water here, and why not? And then also, if you shorted here or you shorted here, you definitely should be covering in front of what is a pretty big level at this 1245, 1255. So yesterday, we did come off the lows. We're down this morning. Use 1266 as your point of reference to trade against today. We break below it. You have a major zone around 1245, 1255. If we get some type of catalyst out of the G7, I'm not sure what it is, and we take back this 200-day around 1282, I think there's going to be a huge wall of resistance between 1295 and about 1303.
Now, we've corrected enough where things do look cheap. So as far as getting long, should we wait to put long-term macro money to work?
I think, again, if you sold right and you think that this was enough, only small. You don't need to find the bottom. You don't need to, you don't need to be the last guy to cover your shorts, and you don't have to be the first time long or the first guy in. Wait for a little bit of a move off the lows. Wait for a reversal pattern. Wait for some clarity, because anyone that thinks that they're timing the bottom fundamentally, then things can get a lot cheaper because you're not trading a level versus a level. You're saying over time it's going to get better, and we've seen that not work in the past, especially when you're in systemic times, because we can go down another 10% from here. We might not. So at this point, I would just wait for more clarity before you start putting your hard-earned money to work.
Now, we saw high beta tech yesterday provide some cash flow opportunities. Taking Apple, for example, actually a two-way trade there. There was a calculated short and a calculated long. So what did you make of yesterday's action, and how can we use that to our advantage today?
It's a good example on how you don't have to take excess risk right now, and you can find the intraday strategies as long as you're educated enough, which we do provide education to figure out the pattern. And yesterday on the price point sheet, I had that 560 as a potential short. You look here at Apple, you will see why, because at first this was obviously a nice little long strategy, which we played until I started to feel like late last week the market was a bit tired. Then it broke this small little ascending channel to the upside. So why not look for continuation below this 560? So that was a short point. That was a nice short point in the morning. And then when the market's reversed, you could have bought it when it came back above 560.52 and closed up almost $4 from there. Or there was a price around 555 that I tweeted about. So today, with the futures down, I think it's down like $3 or so. So, for cash flow, I think guys will be looking to see if they see a positive divergence, meaning the futures go lower, Apple holds in there. You could play Apple from negative to positive, a little bit of a push, and create cash flow to make money each and every day until we see some more clarity on whether you could sink your teeth into anything.
And Amazon up early yesterday, strong all day actually. There was a small downtrend in place, so do you think we'll see it break the mini downtrend?
This one has been under pressure ever since it started trading into that earnings gap. And it's been a better short than long. So I would say with yesterday's action, switch gears a little bit. Because if you do look at the chart, you will see that it is still holding a decent portion of this earnings gap. Yes, it didn't hold higher up here, but the market's been under such pressure. You know, if you look here, this was a tradable strategy we had, shorting below this area, shorting below 220. Then I even think some guys made money shorting below here, but now you have this big wide range bar that engulfed the last three. It's actually holding, I believe, what is this, the 50-day, so it didn't even make it to the 100 or 200, so that's showing some strength. Today here, with it down a little bit, with the futures down, look for a negative to positive, and some guys might even get some momentum, which is hard to find, if it could break above this 215, and then the next level will be, retesting this 219 to 220. So this is a candidate, because of yesterday's action, that it could give you a cash flow long and maybe some continuation.
And Baidu had its first up day. Nothing crazy, but gave opportunity for a day trade. So it closed on the highs. Does that give you any optimism about this stock that's been weaker in this sector, or is it wiser to stick with the typically strong ones?
I think for right now, it's just a trade. And yesterday it was up early and then it closed on its highs. So anything that closes on its highs like it did yesterday, it becomes a candidate to trade today with the futures a bit lower. If you look at the chart here, it's been battered and bruised. Stock has come all the way down. So you talked or you mentioned about bottom feeders. Well, some people probably came in to be a bit of a bottom feeder. This was the last time it broke this upper pivot. This is when you get out of 145. This was the uptrend that it was following, that it also broke at the same time. You had another opportunity to sell when you had this lower flag, this bear flag continuation. So down here, ahead of this decent size support, some guys could have jumped in. You saw a little bit of a red dog reversal here where it tried to make a low and it came back above it. So I would say this is something to turn to. And if it wants to rally and tech wants to have anything that's viable to be in the game, you could see a move back to maybe 119. So from here, it's a small trade. And then if this lower pivot comes into play and the market for some reason gets stronger, perhaps it resolves to the upside. Baidu is probably one of the only Chinese stocks I think you could actually consider right now, especially in the tech arena.
All right, well, and Google didn't show any real power yesterday. We have talked about support level around 560 once it broke the 200-day, and it did get pretty close, showed relative strength. But does this stock still not look too compelling?
Well, this stock, like everyone knows and everyone likes to remind me, it was my high beta stock of the year alongside Walmart in retail. That went really well. But for this one, it's just misfired a few times. The last two quarters were not accepted well with the street. If you look here on the chart, you will see that this was the first. This is actually when we talked about it as a great technical play, and it worked for the short-term guys. But then this would happen after earnings. It held the 200-day, came in again, tried to hold it. So we went on record saying, listen, if you're in this trade and you don't want to stay with it, any stock that breaks the 200-day, you get out of the way, and that was around 596. If you did that, some guys might have come in and said, I'm going to try, for a little bit of a bottom feeder trade into this 560. So at this point, first green day, it could continue. Maybe it wants to retest this 585 to, 590 area for a trade. But again, these things don't have to do that. But it is something to turn to today. As it was strong, it closed near the highs and has some more room to, prior resistance.
Okay, oil had its first up day yesterday. Coming up, we're going to go in the trenches with oil-related names, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
As I said right before the break, oil had its first up day yesterday. Obviously had been getting crushed. The OIH closed strong, so Scott, could it try to push a little higher?
That's a good question. And it closed sort of strong and almost green, and that's been big for oil-related names. I think last week Goldman Sachs came out and said, oh, now's the time to buy oil-related names, and I think that was on Wednesday before we fell another 50 handles. Anyway, I hate to keep beating up on them, but I just don't understand their timing. Bottom line is, oil was up. These stocks tried to put a small low in. You have a new point of reference to trade against. If you look at the OIHs, you will see, it's been battered and bruised. There were a few different ways to get out of this thing. Obviously, in December, it wound up being a nice rally, nice and methodical. We talked about that going into the first quarter, like most things. Then you had your first high, broke this uptrend, retested, couldn't get back above it, a sell signal, and then from there it's been battered and bruised. So yesterday it did try and do some type of reversal versus the lows of October. It's below all the moving averages, so this group still is very, 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 did I say very? Yes, very weak. But if you want to trade long versus 33.57 for a trade that could, I guess, possibly get back to this area, it's a small trade. Maybe it goes a little bit higher. And if you were shorted and you were trailing it all the way down, congratulations. I was not. This area is not a bad area to cover ahead of a recent pivot area, which we do have right here from October.
And Schlumberger actually had a decent day yesterday. So could we see a bounce? How much room is there for one?
Well, this one is one of the unfortunate ones where everyone thought it was like a safe, high-value, fundamental play, and even these, technically, you have to follow the rules. And Schlumberger during the rally didn't show power, didn't show strength. It's below all the moving averages. Maybe does it pick up steam in the third, fourth quarter? Can it ignite? Yes, but I'd rather wait for that. We talked about this last week. I guess just like the group, you have another point of reference to trade against if you're trying to buy a tier one in the hole. But again, it's not that compelling. If you look here at Schlumberger, you will see that this stock broke this just a channel here, right? Which was a late sell. It was going sideways. A lot of times you saw it try and break out. I know I tried to be long around here, broke out, failed. Then you have a high, lower high, and then now it's just below all the moving averages. I would say if yesterday's action is something that you are interested in or you've traded long, traded versus area. Okay, you have a small little pivot that it's trying to put in place. This is around 60.75. So if you're there for a trade, here it is. If you do, I think traders might add to it if we do see some more strength in oil and the market tries to bounce. This can trade above this and being add around 62.70 for a push back to this broken resistance area, but then you have all these moving averages, so much resistance. I just think it's an avoid unless you have to trade it.
Now, what about Occidental Petroleum? Closed the day up over 2% yesterday, so looking at the chart, could there be more upside in store?
Well, this one looks a little bit different. This actually was working on its second day and it traded above the previous day's highs. So for this group, that's like a big deal. You got 2 days in a row. So question is, can you get 3? I don't know. If you look here at the chart, you will see that it also has been battered and bruised. So many different ways out of it. Last one being right here. So if you sold this correctly when it broke this upper area, or look at this trend. Look at this trend to the downside. Just has been stuck in this downtrend. You have the luxury of trying to buy it back. This was a bit of a reversal day. 2 days ago, it was green. So some guys probably tried it long, and congratulations, you got your second day or your follow-through day. At this point, if you traded versus low here, but I don't see much more room except for big-time resistance coming in between 85 and 87.
National Oil Well Varco NOV below all key moving averages. Could we see a bounce there?
This one didn't even close near the highs of the day, and it looks dangerous to me. So if you go here and you look, this chart also, like many of them, battered and bruised and broken. This one actually I think could be a short. Could just because there's a price pattern here. If it doesn't rally in the next day or so, I think traders will be all over this thing. If this thing gets below 63.33, I would say it could be shorted for a move back down near the lows. But this is the new line in the sand for this stock, as I think it's more of a short than a long.
And Exxon been crashing. We've seen 6 days of selling. So could we get an oversold bounce?
This one could from this area. We talked about selling it like 2 weeks ago. Goldman actually had a decent timely note on it. They said to sell it also when they upgraded some of the others. If you look here, we like channels and we like to trade against them, but when they break, you got to get out of the way. And if you look here, this was a pretty nice sized channel that it was trying to stay in. Look how many times it tried to break out. I think I tried to play it along a few times breaking out, but it didn't. This was that last little ascending channel to break to the downside, and then once it couldn't get out of the way, this was your last sell signal. So if you did so, it just filled a gap right around here. It tried to close okay. I don't think this is compelling support. I think more compelling support is down here, down in the 74 areas, but obviously it's going to have to break this first. So if you're trading long, 77.20 is your out. If it starts clearing this little pivot, I do think you have some type of cute trade, but I think people will be shorting this anywhere between 80 to 82 if it could even get back up there.
Let's do some quick hits. Gold we talked about in the Express. obviously ignited on Friday and held in well yesterday after Friday's move. So can it go higher?
I think if it's going to go higher, hopefully it happens in the next day or so. People have been trying to be long gold. I went long gold on Friday. I think as long as it holds that earnings gap and goes sideways here, and finally people start to trust it, that it's starting a new trend, because one day doesn't make a trend, and it still has some bigger trends to contend with. You know, right now on a micro level, look at this. This is one level, 156.16. If it holds above this today, I think short-term guys will be happy because they have no decisions to make. I think you have to give it to at least this, though. And for any momentum to come in, I know I would be adding if it starts taking out this 158, 158.30, and then you have to, know where bigger resistance is, because this intermediate downtrend comes into play right around here. So for gold to really get frisky, it's going to have to start getting above this and staying above it with some volume and some commitment.
Now, Expedia held Friday's low yesterday. What do you make of the action there?
I think strong, you have to, I guess, what's the word? You have to respect strong stocks. I would not be short this, because look at the chart here. It looks like it's ready to go again. Last time we talked about it was right here in this flag, and look what happened. Now it's flagging again. So shorts are on the run here. Just the question is, will markets let things break higher? So I guess for a trade, if it starts getting above 46.50, just take it and run and do it small. I would not be just shorting this thing because we're in a market correction, because right now a lot of the shorts are trapped.
All right, Starbucks, big story today. People were talking about it yesterday as a leader, flexed its muscles a little bit, looked pretty strong. Now, news of its bakery. They're saying it'll take 2 cents off earnings. What do you make of Starbucks?
I think unfortunately, this went out really strong yesterday. So any traders looking for momentum took Starbucks probably long. I actually took it long because I'm like, look, this was strong. If we get some follow through, this should be it. And then lo and behold, some news comes out, it's down $1. So I would say if you were in from yesterday, it really has to hold 51.49. If it doesn't hold this 51.49, it tried to put a double bottom in, I would get out of the way. I would say if you're really not committed, I would say once it doesn't hold half of this, just call it a wash. But I'm going to see, maybe they take a positive. Maybe some of the buyers from yesterday say this will be a good deal. 100 million, 2 cents doesn't make sense, and then see if it could go positive. So I'll look to see if there's any strength there to buy on this weakness.
Let's also touch on Wynn, because Steve Wynn in the headline saying his $4 billion Cotai property will be profitable. What's your strategy looking at Wynn today?
Wynn, it's trying to bounce. Goldman Sachs last week came out and said to buy it was like 104. Now I think if you look at the chart, it's like 98. It did reverse yesterday. So this was a candidate for an oversold bounce. It traded below the low, closed green on a day when not a lot of things closed green. Let's see if the news could rally it. If it does, you do have a pretty significant resistance in this 101 area, 100 area, and then much bigger resistance right around here at 105. I would say if you sold this outside day, the day they actually announced, I think the property acquisition that they had the rights to it, this was your reversal. Then when it broke, this was another way out. So if you got out there and you're a Steve Wynn believer, from this area, the risk reward makes a little bit more sense. But again, they're talking about Macau numbers slowing. LVS has been a sell. These things, every time you try and buy them, you can make small cash flow in the hole, but anytime you add on strength, it's been a fruitless game. So just be a little careful there.
Well, let's end on JP Morgan, of course, continuing its downward spiral. Heavy yesterday. Obviously, some out there knew we'd get more bad news today about the company. What do you do with this mess?
It's a mess. This is one of the nails in the coffin of this rally, because people trusted JP Morgan. People said, if I'm going to own a bank, I'm going to own JP Morgan. So there are a lot of people caught in it. And it's tried to stabilize a few times and still shows relative weakness. If you look here at the chart, we talked about each time it showed relative weakness, you had to get out of the way. Here's when the news came out, then all of a sudden it engulfed it, you sold it. Came all the way down, tried to hold sideways. When it went below this recent pivot, what do? We sell it. We take the name out of the chart. And then yesterday, I was watching it all day. That's why I guess I'm not longer than I am right now, because I'm like, what's wrong with the banks? It closed on the lows. So with that said, it's down like 30 cents. It announced a loss of 4.1 billion versus 2. 30.42 is a point of reference. And then you have major support down at 28. So I would say that there's a small chance that if they want to rally this market, if they take JP Morgan from the red to the green, then maybe people will say it's all washed out. All the losses are figured in. The move from 46 down to 30 is enough, and that could help spark a mini oversold bounce. So JP Morgan should be on your radar, and watch how it acts. See if you see some type of divergence to buy with a calculated plan.
All right, so we're keeping JP Morgan on our radar. Of course, we have G7 later today. Anything else that you're focusing on as you head into trading today?
I'm just trading levels versus levels. I'm trying not to have an opinion. It's hard to be short, but just because it's hard to be short doesn't mean the longs are working. You know, we've been able to buy them in the hole, but every time you add to the position, they're not really working. So I would say take your trades, preserve your capital, expect the unexpected, because at this area, we could try and bounce, but we don't have to. But if you're sitting short and you just think we have to have lower prices, we do have a few catalysts in front of us that could, you know, move things around. So just keep it light and stay within your trading barriers, so to speak.
All right. Well, happy Tuesday, everyone. Good luck with your trading and have a great day.